Hey there, I'm Scott Welsh. Welcome once again to the Thursday video where we talk about beating the market. And today we're going to talk about my favorite counter trend system. That sounds exciting. Let's get right to it. Three things today. As I said, the first thing we need to do though is define counter trend, which is not as easy as you might think, and it leads to borderline ridiculous conversations, but we'll talk about that. We'll talk about my favorite system and why, and we're also going to give away the actual system details. I promise to do that. There's your disclaimer. Please do not risk money you can afford to lose. And we do talk about numbers. They are hypothetical. They're not out of my actual trading account. Moving on. Counter trend. When we talk about systems, some people say, well, counter trend systems don't work, or trend systems are the best, or vice versa, or verse versa. Either way, you sometimes get into a little bit of a sticky situation when you start defining things, specifically counter trend. And if you take it far enough and you think about it hard enough, it can tend to get a little absurd. For example, what is the biggest, most famous counter trend system? It has to be value investing, right? Warren Buffett. You buy something that has gone way down. Well, why would I buy it? Why would I buy when others are fearful? That is going against the trend. It is the clearest counter trend system, I guess. But here's the thing. Some people take value and they wait for it to level off, or they even wait for it to come back up towards what they think is fair value, and then they get in then. Well, if you get into a value investment when price is going your way, is it counter trend anymore? See what I'm saying? Even better example is pullbacks. I trade what I loosely classify as trend robots. Now, there's the breakout based on trend following, which is clearly following the trend. But my Hornet and my Heron robots, I consider them trend robots, but they get in on pullbacks. So if I'm going long with the trend in air quotes, see that, but I get in at a pullback, well, what is a pullback? It means it's going down. So a trend trade is actually counter trend in nature. It doesn't make sense. See what I'm saying? Is it a trend? Is it a counter trend? It leads us into a ridiculous hole. And it's not always worthwhile to have these conversations. But let's define it anyway, because I want to have this conversation. For the sake of clarity, let's call reversion to the mean. So if you have something, if you're going long and you have some sort of fair value up above and prices down below, regardless of when you take it, let's call that counter trend. It's going, trend has moved away from the mean. It's going to come back to the mean. Let's call that counter trend. Okay, fine. You can have your own definitions, but that's what we're going to call it. Okay, so if reverting to the mean is what we're talking about, what's my favorite? I know you're dying to know. Well, I'll tell you. I love Warren Buffett style trading. As you probably know, when I started learning about investing 2004, I read all the Warren Buffett books. I love them dearly. That's the way I wanted to trade. That's where everything began with me, buying something at 50% off and then waiting for it to get back to fair value. I love that so much. But that type of trading can be very vague. What do I mean by that? Well, do I buy it at 50% off? Do I buy it at 40% off? Do you buy it at 60% off? 100% off? And how do you get 50% off in Forex, for example, where the price of the dollar yen is 110.82.3? Well, what's 50% off of that? Right? It's all relationships, or it's really, really hard to get a determinant in Forex. And futures, a little bit easier, but there can be problems there too. So that's a problem. All right, well, what if you want to stick to stocks? PE ratios, low PE ratios, that's how we're getting in. Well, what if it's price to book? Well, price to book is better than PE. Well, what about return on equity? We want a return on equity that's high, but the price is low. There's all sorts of vague ways to enter a counter trend value trade. That's difficult. Furthermore, any good value investor who's long term will tell you that it doesn't work out right away. And sometimes it doesn't work out for a whole year. And sometimes it doesn't work out for multiple years. Right? 2000 to 2002, how much did the stock market make? Not much. I mean, like zero, like negative. Okay? It can last decades, Well, not plural, but it can last a whole decade. Have we had 10 years where we made nothing in value investing? Yes, right? So it's very vague. It can lead nowhere for a long period of time. Now, it eventually leads somewhere, I want to believe, the numbers say, but you see my problem, okay? So value investing is great, but it's got its own problems. Second, I love what I call fair value trading, which means you put an indicator on the chart, a moving average, let's say, or a pivot point, let's say, something that signifies what the actual instrument is worth, and then you trade back to that when it's moved away. Doesn't need to be 50% off numbers wise, it can be indicator based. Great. But trading this way back to fair value, and for me, that was at the time the 800 period simple moving average. Trading back to that made me a ton of money, but it was also the worst week of my life trading this way, especially without stops and trading big trade sizes. To do this sort of trading right, to trade back to an indicator based fair value, a simple moving average, whatever, to do that right, your trade size needs to be small. That's fine. You can get around it and you can trade very consistently, extraordinarily consistently. But where's the big money? We can't have big money if we have small trade sizes. So I like it. I like it a lot. I've traded it discretionarily and with a robot, but there are problems with that. So those are two big styles. What's my favorite? Well, right now, and I reserve the right to change my mind, it's the weekly pivot system. It's a robot I built many years ago. This has been around a while. First, I built it for TradeStation. Next, I built it for MP4, which is where I currently trade it now. This is not a new thing. If you've listened to the videos or on the newsletter list, you know that I've talked about it before. This robot was created, as I just said, years ago on a system by Rob Booker. Rob Booker traded back pivot points. He still loves pivot points, as well he should. They are awesome, okay? Now, Rob eventually taught me the system. It's the first time I'd ever even heard of weekly pivots. And as anyone should, I made it my own. I added a few details and built a robot on it. No big deal. It's basically trading back to the pivot point, right? So right now, trading back to the weekly pivot is my favorite way to counter trend trade. Now, let's talk about something. Let's talk about an instrument. Let's give some numbers. Well, where's a good place to start? Well, by now you know the good place to start. The best place to start, as I've talked about, the best currency pair, go back and look at the videos, are the euro dollar, dollar yen, or pound dollar. Those are the big three. So start somewhere with one of those three. That's what I recommend, and that's what I'm doing. I'm looking at one of those, the dollar yen, USD JPY, on the weekly pivot system. Here are your details. Price reverts to the mean. Right? This is a life thing. Like, it's not just a trading system. You get really happy and then you calm down. You get really sad and then things get better. Everything reverts to the mean. It's universal. It will always be that way. No more discussion. Now, when you're specifically talking about weekly pivots, did you know that the weekly pivot is made on Friday, the previous week, a high, low, close, divide by 3, and you have a number for the next week? You have this every single week. And then price either opens down below and comes up and touches the weekly pivot, or it skyrockets up and reverts back down and touches the weekly pivot. Did you know that the percentage rate of weekly pivots hit on any given instrument? So just go look, plot the weekly pivots on your chart and go look. Has price reached that level at any time? And the answer is yes. It's like 96, 97, 98% of the time. If you look at any given instrument, it's probably every weekly pivot up to a 98% effective rate has been hit. On the Dow Jones, I did the research a while ago, every weekly pivot has been hit since the 1920s. Long, that is, not short. Remember, stock market has an upward bias, but every weekly pivot. So if any weekly pivot had ever been missed on the Dow Jones since the 1920s, it eventually got hit. Might have been a long time, but it eventually got hit. You want a little tidbit on the SPY, which is the S&P 500, there's only one outstanding weekly pivot long that hasn't been hit, and that level is 289.11. The chances that 289.11 are going to get hit are 100% if you believe the data, all the past data, okay? It's going to get there at some point. I don't know when, but it's going to hit that weekly pivot point, right? There's a little tip for you. So considering that the success rate of weekly pivots getting hit is so high, why not build a system based on price coming and hitting a weekly pivot? And it's with all instruments, stocks, futures, Forex, doesn't matter. Why Rob loves it, that's why I love it. That's why a lot of traders love pivot points, at least they should. Okay? Pivot points get hit. If price moves away from that level, we've got a high probability trade. Does that make sense? Leave a comment, send me an email, join the email list, send me a dollar bill, buy me a cup of coffee, and I'll be happy to explain more. Okay, here is a trading example on the dollar yen 1 hour chart from January 2019. Here's the weekly pivot. When trading ends here, calculation is done for me, and the indicator is placed on the chart, and there it is. Okay, price wants to hit the weekly pivot level 98, 99, 100% of the time. At some point in life, the price goes away. Well, this system is based on hasn't hit it, hasn't hit it, hasn't hit it, and oh, it's far away. I think it's going to hit it. So you place your bet right there. How do you know how far away? You test, or you make a value judgment based on what you've seen. I tested, I got a number. This moved away, and you can see how this trade goes out. Oh, went back to the median? No, ran away a little bit. Then it came back? No, ran away. And then by the end of the week, it said, listen, we haven't touched a weekly pivot yet. And look, it just exploded right back down to this level, hovered back at fair value, weekly pivot, and then moved on and went about its life. Okay. You look at the very next week, look at that. As soon as the pivot was created, price wanted to touch it and then even touched it again. Price touches weekly pivots, and that's what this system is based on. And this was a winning short trade. That's what it looks like. You can do this manually. I've done it manually. Just wait to say, oh, I want it to get this far away without touching. And once it does, you set your order in, and there, boom, you're in. I love saying boom. Okay. What are those exact numbers you want to know? Ha, tell you. Dollar yen inputs. It must be 80 pips away. That's the number. Can you find a different number? Sure, but that's the number. The take profit is 80 pips, which is what? I'm betting on it to get almost exactly back to the weekly pivot itself. Pretty cool, huh? That's what the math and the testing showed. Stop loss. Well, we got to give it some room, so I gave it 100 pips of room. So this could go 100 pips up here before it stopped out. But there is a stop. This doesn't go on forever. There is a stop loss. There are losing trades. And I like a break even. When if price moves 70 pips in my direction, I am not giving that back. Why? Because I'm not giving that back. But two, if it moves 70 pips, I mean, isn't that really back to the weekly pivot? I mean, hasn't it really done its job? Will it eventually move back? Probably. But why screw around? Like, it did its job. It moved 70 pips in our direction. Let's at least move to break even at that point. I mean, doesn't that make sense, right? The price doesn't exactly know it went 80 pips. Anyway, I moved to break even to 70 pips. Now, this is an interesting phenomenon. Check this out. There is no Tuesday or Wednesday trading. Do not take a trade, no matter what. Ignore those. Why? Is that just a curve-fitted anomaly? I don't know. Does it make sense? Price is formed on Friday. That's the weekly pivot of next week. The market opens in Forex on Sunday, and it's going to gap maybe in one direction or the other. Well, whatever happened last week, people have calmed down over the weekend. It's like, whoa, price went up. Listen, let's calm it down. Let's go ahead and take our wins, and those taking of the wins would take it back down to the weekly pivot. Or if it was a down week, listen, don't be so depressed. The fair value of this price is really up there. And this usually happens as soon as the trading begins and people are back in the market. So you got your Sunday, Monday trading. Traders have had the weekend. They've digested last week. It's time for it to get back to normal. All right, listen, everybody, let's get back to normal. And price moves usually in the very first trading days right back. Now, Tuesday, Wednesday, people have made their decisions. They've gotten out of their positions from last week. Now we're looking to the future. The Tuesday, Wednesday is like, oh, new news, new things. I got new ideas. And so price is not as orderly on Tuesday or Wednesday, right? We're thinking about the future. Sunday, Monday are getting back to normal. Tuesday, Wednesday are what's next. But if nothing has really happened, if Tuesday, Wednesday, you don't get what's next, by Thursday, Friday, like, listen, it needs to get back to fair value. Like this is ridiculous. Or nothing's happened. It's like, listen, it's Thursday, Friday. It needs to get back. Enough's enough. But really, the best time to trade this philosophically is right at the beginning, like, oh, we made a mistake. Let's get back to normal. Or, nothing's really happening. What am I doing way up here? Let's get back to the weekly pivot. So that's why you take those days out. You can trade those days, but it's highly effective, at least with the dollar yen and a few other currency pairs, mind you, to just get rid of the middle of the week when there's no rush to get back to the pivot. There's a rush when the market opens, and there's a rush when the week's going to close. There's not really a rush in the middle. Does that make sense? To me, it does. If it doesn't, then go ahead and trade those days, I guess, right? I used 0.75 lots. I did not compound. Here's the report, MT4 style, right? 99% modeling quality. Hooray for that. Started with initial 10,000, and I'm sorry, these reports aren't easy to see. Hopefully you can see them. The total net profit, 32,000. Maximum drawdown, only 4,000. So if that happened right off the bat, you're looking at a 40% drawdown, which is still less than the market. But this happened in the middle after we had made a bunch of profits. So this max drawdown was only like 9% of our account, right? So this is a high percentage account. We've got a nice win rate, 63%, 67%. We're in the 60s. You can see that trading back to the weekly pivot does have some merit. Drawdown is pretty minuscule. Profit is kind of nice. Profit factor reflects that. Okay, pretty interesting, huh? Is that worthwhile? Like almost 8 to 1, or actually over 8 to 1 ratio of profit to drawdown? Definitely worth your time. That's why we're talking about it. I like this a whole bunch. So what's the problem? Well, there are losing years. Guess what? Price goes crazy sometimes. It will not revert to the mean if everybody's panicked. It's only going to go down or it's only going to go up. Panic happy or panic sad. And this can last for months, and you can have a losing year. 2012 was a losing year. 2017 was a losing year. So far, 2019, it's down. And the testing period was from 2006 to 2019. So since 2006, we lost in 12 and 17, and we're going to see about 2019. Well, I'm not going to trade a system that loses for a year. Most systems do, so that's one thing to keep in mind. But check this out. The average winning year was 3161, right? That's like 31%, no compounding of a $10,000 account, right? That's the average winning year, while the average losing year was only 800 bucks. That's pretty good, right? If you're going to take a losing year, we'd like it to be tiny, and that's not really that bad at all, right? So normally we get a $3,100 winning year in a $10,000 account, and the worst we have to suffer through is an average of 823. So to me, that seems reasonable. I don't know what it seems like to you, but there also is the ability to compound. Just had this robot built into a compounding auto-sizing machine, literally. And if you take these exact same numbers, but compound it, meaning raise your trade size as your account goes up, lower your trade size as the account goes down, 10,000 turns into 397,000 since 2006, which is pretty nice. Granted, you'd have to deal with these losing years. That's the problem. But any system that turns 10,000 into hypothetical 397, I think is worthwhile. Again, that's why I brought it to your attention and I shared it with you, okay? This system, being Countertrend, is going to struggle in hard trending times. That makes sense. When price only goes one direction, it doesn't revert back. But in sensible normal times, which is most of the time, right? We're not most of the time in a trend. Most of the time we're in the opposite of that. It's super effective. This is a really nice system, especially when things aren't too crazy. All right, that's all for this time. You can get these robots if you're ever interested by go to scottwellstrategies.com and hit the memberships page. You can become a member and get all the robots that you ever wanted in your life, all for one small price or big price, or you can even tip me if you want. I do take tips. Join the newsletter, going to scottwellstrategies.com, hit the contact button, and get on the newsletter where we talk about strategies every single week. And that's all, everybody. I'll be back next time with more fun goodies. Bye for now.